If you're earning £50,000 or more from your rental income, everything changes in April 2026. Now, a lot of the property investors or landlords I speak to are completely unprepared for what's coming. I've helped a few investors actually get onto this scheme a lot earlier than they should be, which is April 2026. And this has helped them reduce their software costs because subscriptions are still much lower now than they will be at a later point. Right now, providers are trying to get as many people as they can onto their softwares. But by the time we get to April 2026 or 27 for £30,000, it will be a lot more and it will cost more. So getting onto this earlier will be cheaper for you if you go with the right tool. This has also helped them reduce or avoid surprise tax bills. We all know most people do not want surprise tax bills at the end of the year, but this avoids that because you're filing quarterly in this instance. So you will be able to see what your tax liability will be each quarter rather than at the end of the year, which will be smaller than the full year's worth. And also because everything is now digitalized, this means all records will be kept digitally. So this has actually helped most people keep track of what they're spending on and help them find savings. Some also are able to see whether they can claim for certain expenses before they claim, and this helps them avoid penalties or HMRC audits. So it's actually more advisable for you to be getting onto the scheme or finding your software before April 2026, or if you're getting in 2027, try to do it before you're supposed to be enrolled. So what is MTD? MTD, which is also known as Making Tax Digital, is a new plan or a new scheme that HMRC has brought about. All landlords or all business owners are supposed to be filing electronically their tax records. So they want to do away with, manual filing or posting tax returns, and they want people to use commercial software to file all their records. This means that everything will be electronic, including how you're keeping your records, your receipts, and they can easily track. So far, HMRC has been complaining that they're losing a lot of money in terms of reviewing, how much it costs them to review the tax returns, and also how much they could potentially be earning from tax from people. Equally, on the other side, you as a taxpayer, you could actually be losing money if you're still doing things manually because you can lose track of records. You could be making errors that can cost you as well. So it is almost a win-win for everyone. But what this means for the average business owner, or for all business owners, is that if you're earning £50,000 or more in revenue, you will be required to get into this plan by April 2026. If you're earning £30,000 or more, then you're required to be on it by April 2027. If you're on £20,000, then it's April 2028. So it's phased out and it's not all happening at once. It is tiered by the amount of income you're earning. What does this mean then? You're supposed to be using commercial software now to file all your taxes, and this will be done on a quarterly basis. So you're not only doing your taxes at the end of the year, but you'll be doing this on a quarterly basis, and then you do the annual tax return, which is a summation of all the 4 tax quarters. So this could sound like a lot of work for people that were doing it manually, but it is actually beneficial if you're going to be finding the right software and if you're going to be doing it on a regular basis, which is quarterly this instance, because it has benefits for you. So like I've mentioned before, what I've seen, you will be able to see what your tax bill is likely going to be for the full year by calculating it on a quarterly basis, so you don't have surprise tax bills. You can also, if you get on early, cut down on your software costs. So instead of getting on when providers are maximizing their prices or they're charging ridiculous prices, you can get on early and start to do things digitally. You just want to make sure, if you're already sending your tax returns electronically, that your software is MTD compliant. So not all software is MTD compliant. You just need to make sure that yours is, and then you'll be able to do it. Ideally, you should be able to file from that software. So you're putting in all your records, they're flowing through from your bank feed, for example, and all you have to do is click submit if you've reviewed and you're happy with the numbers. So in terms of software, what should you be looking for? So like I said, most software is already available for people, property investors or business owners to use, but I would go onto the HMRC website. So I'll pop up the link here. This is quite robust actually. They've done a pretty good job because you can filter by your needs. So are you a company? Are you a property landlord? What sort of business do you have? What are you looking for? Do you have any other income that you're earning other than property rentals? And that filters into the software that you can use. So they've done half the job for you. You don't have to go looking elsewhere to see which one will be the best for you. But I would suggest that once you have a list of software that you can use or you can select from, find something that is definitely MTD compliant. If it's on HMRC's website, it will be MTD compliant likely, but just double check that it is before you start to use it. Find something also that's within your budget. So find a software tool that's cost appropriate. So you don't want something that's overpriced and you're barely using it, or you have only a couple of properties. You want something that can fit into your business model from a cost perspective. If you're a property investor, for example, you probably want a software tool that will generate other useful reports for you. So examples of reports can be void analysis to show you how often your properties are void, to show you also the rent rolls, where you can increase your rentals, how much rentals or how much profits you're getting per property. So you want this broken down because these are useful insights that you can use in your property business. So all in all, I'm just saying find software tools that are appropriate for you. It's not one size fits all. You're not all going to be using the same sort of software. So find something that's useful for you and you can get different reports from it. That will be good for your business and from where you can make strategic decisions. I would also find software that can integrate with the bank feed. So usually what would happen is this tool would request for access to your bank account. Just note, it's not going to be making payments or taking money from your account. It's just integrating with the feed so that it gets the bank statements directly. That way it can determine which ones or which payments relate to your properties or which income will relate to your rentals, for example, and you can easily categorize because it's taking into account every single thing. This will also reduce the errors because you don't miss any transactions and you can account for every single thing that's happening in your business. So find a tool that integrates easily with your bank feed or with your particular bank account. I would also say if you're using other tools, so maybe you're preparing financial statements, you want a tool that can integrate with the other tool that you're using. It can be anything, maybe not financial statements, but maybe your letting platform, or you want to be able to manage your client accounts. Can it integrate and will it make work more, or can it make life easier for you? So in terms of the next steps, I'd say go onto the HMRC website, see which tools work for you and your particular situation, assess them and see if you can find a software tool that can give you really useful insights that you can use in your business, and then start to migrate. I would move earlier than I'm supposed to because then it's going to cut down the costs for your software and you can get it for cheaper, so you can get more value for the money that you're spending. If you do also, it gives you time to learn the system, to reduce the errors that you may potentially have because you're adapting and you have time to do that without the pressure of filing deadlines. I would also start to keep a record of all your transactions. So if you have receipts or invoices that you're sending to other clients or you're getting from your suppliers, you want to start keeping those because those will be needed for your bookkeeping or for your electronic filings. So you need to start keeping those so that it can be a more automated process on your end. I will share a link of a checklist that you can use if you want in your business, an MTD readiness check. You can just use it to see if you are ready and some of the things that you may need to take into account to make sure that it's a seamless process for you and that you are compliant by the time that you are supposed to roll into. Remember, it's tiered, so it's not everyone moving into the scheme or that HMRC requires to be complying. £50,000 or more in 2026, and then £30,000 or more 2027, £20,000 in 2028. So just make sure you know when you're getting on and you start to look for your options and you will be ready to go. So I hope that's helpful. Download the checklist. It might be useful if you're already using one, or if you're already on some software tool, then good for you. Just make sure you get something that will give you good insights for your business. I hope that was helpful. If you have any questions, just pop me a message. I should be able to help you. Thanks for watching.